Hello and welcome to Business Today. I am Siddharth Zarabi and with me today Mr. Dinesh Khara, the Chairman of the State Bank of India. Welcome to the show, Mr. Khara. The first quarter results are out and the State Bank of India, the balance sheet size is above 50 lakh crore, and there are so many other details. I want to request you to first explain the operational performance of the first quarter to our viewers.
Thank you very much, first of all, for having me on your show. We have done well in terms of growth in advances, both in the corporate as well as in the retail segment. Our corporate advances have grown by about 10%. And also when it comes to retail, it's on a YOY basis. And even in the retail, we have grown by almost about 18%. And when it comes to profit, we have net profit of about 6,068 crores. Though it is slightly less as compared to last year's profit in the first quarter of 6,500 odd crores. But essentially it is attributed to the fact that we have a significant amount of MTM, which has mark-to-market depreciation. And that is essentially attributed to the revaluation of our treasury book, which is held in AFS, available for sale. So as the market yields, the GSEC yield moved up to 6.45 as on 30th June. We were required to revalue our assets, and that led to a MTM loss of 6,569 crores. So if we really look at it, MTM is only a timing issue, and we don't have any credit issue. It is essentially revaluation impact only. And if we ignore that, then our ROA would have been 0.89, and as far as ROE was concerned, it would have been 18% plus. So I think as I see the situation, we are quite well off, and we hardly have any slippages. About 9,700 crore were the slippages, and we have actually pulled back about 2,800 crore also out of these slippages. Our credit cost is 0.61%. Our net NPA ratio is 1%. So I think overall we are quite well placed in terms of the likely growth trajectory, and we are seeing decent amount of demand from the corporate side. It is almost as high as about 6 trillion Indian rupees. We have got already 5 trillion worth of loans already sanctioned, but awaiting availment, and similarly another 1.20 trillion is something which is in pipeline and in process. We expect to see decent growth in the retail segment. Corporate, we have got a very clear visibility of the likely growth. So overall, we are well placed to really support the Indian economy, right, and also to take care of the interest of all our stakeholders.
Mr. Khara, several points that you raised, and we'll try and take them one by one. The first, on yields. What do you expect happening as far as yields are concerned, and what kind of impact do you foresee in the quarters ahead?
You would have observed that the yields even today also it closed at about 7.30, and we have done the revaluation at 7.45. So that way, I think going forward, my expectation is that as the inflation trajectory is moving, we are hopeful that yield should be trading lower, and at a point of time when just before the policy rate increase of 50 basis point, yields were somewhere at around 7.10. And with the 50 basis point increase in the policy rates, it has closed today at around 7.30. So I think with the passage of time, when the inflation gets addressed, inflation concerns get addressed, and the rupee also becomes a little more stronger, then perhaps we expect the GSEC yield should remain within a range, and hopefully at that stage, we would not be required to book any more depreciation on account of MTM.
Since we spoke about inflation, what's your own sense? We have had a fairly decent monsoon. Some parts have been patchy, but as far as the agriculture economy is concerned, it seems to be pretty good as far as the monsoon is concerned, and that should translate into lower food prices. But there are views that inflation has become entrenched and is not likely to cool off in certain segments.
Essentially, for that, the possible reason could have been the crude oil prices. Even they have also started trading at lower than 100. It's somewhere in the range of 90, 94. So hopefully, with the passage of time, when because earlier it was all attributed to the global headwinds. Crude prices were essentially attributed to the global headwinds. But the way it has started now trading at less than 100, perhaps going forward, the inflation expectation might become more reasonable. And as you rightly mentioned, that when it comes to the rural economy and the kind of monsoon which is almost in line with the long-term averages, and also which will actually give the required support to the rural economy. Also, the supply chain related disruptions, which are the other cause for inflation, I think with the crude softening, maybe they will also get addressed. And once they get addressed, and the rural economy also is in a better shape, I expect that those supply chain constraints will not be there, and maybe it will lead to the further softening of inflation.
What do you expect as far as credit offtake is concerned? Because interest rates have hardened, and we don't know whether they will continue to harden and what kind of view the MPC will take. But what's your own view as far as credit uptake is concerned?
I think the way I read the situation is that if at all there's a visibility of demand, then the interest cost per se, when it comes to the various components of the cost for any entity, it would be somewhere in the range of 10% to 12%, depending upon the leverage which they have taken. So I think it may not be a very significant component if at all there is a visibility of the demand. So I think as of now, the kind of scenario which we keep on evaluating, we feel that there is a very clear visibility of the demand to stay. So with that in mind, I don't think so that it will be any dampener for any kind of a credit offtake. I feel that we should have a decent uptick in the credit demand going forward, and that is also seen that for the system as a whole, the credit growth is almost at about 14%, and the deposit growth is somewhere around 8%.
How do you see the non-performing asset side panning out over the next couple of quarters?
As far as our corporate book is concerned, we are very well insulated. Our PCR, including OCA, is at about 90% plus. And if we look at only our corporate PCR, it would be around in the range of 90 to 93%. So I think we are very well insulated from any potential risk. And when it comes to our retail book, the NPA ratios, gross NPA ratios are much less than 1%. So I think we are very well placed, and I don't see any challenge from as far as our loan book is concerned.
Mr. Khara, what kind of demand, which sectors are actually contributing to corporate demand, and even if you could share some details about the SME demand for credit?
Yeah, we have seen decent demand coming from various sectors in infrastructure. We have seen this on. Hello. Yeah, we can see decent demand coming from the infrastructure sector. NBFC also, we are seeing decent demand. Even oil and natural gas also, even city gas distribution, etc. So we are seeing decent demand coming from road, city gas distribution, and even NBFCs, and even in the airport sector also, we are seeing decent demand. This is something which has contributed to the growth till now. And we hope to see reasonable demand coming from all this sector. And when it comes to SME, we have seen when it comes to vendor distribution, dealer financing, vendor financing, all the activities, we have seen a reasonable growth. And we hope to continue to see this kind of a growth quarter after quarter.
Are there any areas of concern that you still see existing?
No, see that for an economy of our size, there would always be some such areas, but so long as we can mitigate those risks, we are quite well off.
Okay, I want to ask you about the upcoming festive season. What sort of targets does State Bank of India have as far as the consumer side is concerned? And it's basically coming out of the pandemic years. What do you expect in the upcoming festive season?
Well, we have the kind of growth which we have seen in the retail segment. We expect to see the similar growth, or maybe tad better than that. This is what our expectations are. But yes, we'll have to probably wait and watch, depending upon how the situations really pan out in the remaining part of this year also.
What about the overall interest rate scenario? We touched upon that earlier, but what is your sense as to how the question of inflation and the growth trade-off is likely to be dealt with in the rest of the year?
I think the kind of we have not seen any tapering off of the retail demand till now. So though the interest rate has already gone up by about 90 basis points as on June, and even now we are seeing a reasonable trend. So I think I don't think so that it is going to have any dampening effect on the growth.
Mr. Khara, I also have another question, and this is to do with those who are connected with Yes Bank. What about the SBI holding in Yes Bank after the equity infusion that we have been hearing about?
See, we just before the equity infusion, our stake was 30%, and we are required to maintain 26% stake till 31st of March 23. And we have not yet taken any decision relating to what will be our future course of action beyond 31st of March 23. So that's where it stands as far as Yes Bank is concerned.
Mr. Khara, I come back to the last couple of questions, and this one to do with the home loan book. We've seen real estate sector doing a pretty decent kind of performance, although affordable housing seems to be a bit of a concern. But as far as the bank is concerned, how do you see your home loan book performing going ahead?
Yeah, we have witnessed about 11% growth in our home loan book. It stands at about 5.75 trillion. And we see decent opportunities across the country, rural, urban, metro, all locations we are seeing a decent traction. So I think this continue to be a promising opportunity for us.
Have the recent interest rate hikes caused any pain on that front?
No, we don't see any such pain.
What about savers? What can you tell savers, and a substantial part of India's savers bank with you? What would you tell them as far as their term deposits are concerned?
No, we are very mindful of their interest, and we have been calibrating the interest rates from time to time, depending upon what the view we take in our ALCO. So we are very watchful of the situation on the ground, and accordingly we will be calibrating the interests.
My final question, we are celebrating the 75th year of independence, and there is clearly a focus on the economy. What would you say is the trajectory as far as India's economy is concerned in the years ahead, and the target that has been often spoken about, which is a $5 trillion economy?
To my mind, the kind of potential which exists in the country, and the kind of capability and the capacity which we have in this economy, I think 5 trillion is actually a reality. This is the way I look at it. We have already seen that exports have really become a very important growth lever. And hopefully going forward, it will further get strengthened. The kind of focus on the PLI, which will actually bring in a sharper focus on manufacturing in the economy, I think it is a very important growth lever, because in the past decade or so, we have seen a lot of growth happening in the services sector, but manufacturing sector was trailing behind. I think this new initiative, this new focus from the government of India will go a long way in terms of creating India as a manufacturing hub too. Similarly, when it comes to the corporatization of the defense factories are concerned, this will also give a further boost to the industrialization. And I think all these factors will eventually ensure that the 5 trillion should become a reality sooner than later.
Mr. Khara, as always, thank you very much for your time. It's always a pleasure talking to you and getting a pulse and feel, not just of your financial performance, but of the Indian economy. Thank you very much for your time with us today.
Thanks a lot. Thank you very much.
If you like the video, do like, comment, share and subscribe.